Litecoin's blockchain just endured a chaotic and highly unusual weekend after a brutal denial of service attack forced developers to execute a massive 13-block reorganization, essentially rewriting the network's recent history to completely erase the attacker's damage. This kind of extreme recovery measure is virtually unheard of on major proof-of-work networks and has sent shockwaves through a community that long trusted the protocol's decade-plus track record. Although the Litecoin team publicly insists that no zero-day exploit was involved, independent security reviewers carefully analyzing GitHub commit history argue the technical evidence strongly suggests otherwise. The deeply controversial reorg has reignited fierce industry debate about the true meaning of decentralization and whether block finality is merely an illusion when developers can manually override more than a dozen confirmed blocks. Critics warn that such heavy-handed interventions expose the fragile reality of security promises on established Layer 1 chains when they face determined, coordinated adversaries. For everyday LTC holders, this crisis serves as a sobering reminder that even battle-tested veteran cryptocurrencies remain dangerously exposed to sophisticated threats that can challenge fundamental claims of network immutability. Aave has raised nearly 80% of the $200 million it needs to cover bad debt left by the Kelp DAO exploit, marking a historic recovery effort in decentralized finance. The lending protocol launched an emergency recovery funding round after attackers drained funds through a sophisticated exploit that left depositors exposed to massive losses across multiple lending pools. This aggressive fundraising push has drawn strong support from major DeFi investors and treasury managers, signaling that key backers still trust the protocol's long-term solvency despite recent turmoil. However, the incident has also exposed persistent vulnerabilities in decentralized lending markets, where complex cross-protocol integrations can create unexpected attack vectors for highly sophisticated bad actors. For Aave token holders and depositors, the final outcome will be critical in determining whether the platform can fully restore user confidence and repair its reputation among institutional lenders. Successfully closing this round could preserve Aave's position as a leading lending venue, though users will likely demand stronger risk controls before committing fresh capital to the protocol. The United States Department of Justice has officially closed its investigation into Federal Reserve Chair Jerome Powell, removing a key procedural barrier that had been blocking Senate confirmation proceedings. The decision paves the way for Kevin Warsh, President Trump's nominee and a noted digital asset advocate, to advance toward confirmation as the next Fed chair without that lingering obstacle. Warsh has previously signaled strong openness to blockchain innovation and clearer token regulations, meaning a leadership change at the central bank could reshape the macro landscape for digital assets over the next 4 years. Bitcoin is trading near $78,033, up roughly 0.9%, while Ethereum sits at $2,350 after gaining about 1.6%. Meanwhile, PI has climbed 7.4% on momentum, standing out among altcoins even as the Crypto Fear and Greed Index holds at 33 in fear territory. For investors, the prospect of a crypto-friendly Fed chair represents a potential long-term tailwind for risk assets and token valuations across the broader digital asset market.